Hey guys, what's up? It's Tori, back with another weekly market outlook video. Today we'll be covering a bunch of different asset classes, from currencies to indexes to commodities, so make sure you are buckled in tight. But I don't want to waste any more time. Let's get straight into the video. So right here we're starting off on the DXY, which is the dollar index, and taking a look at the COT data right here, which you can get for free online. It is publicly available information, which happens and updates each Tuesday's open interest based on futures only reports, where you can get all the information that you need right here. So take a look at the DXY. Let's close this. You can actually see that currently we are pretty mixed across the board, right? So we are pretty mixed, and this mixed sentiment is quite concerning at the moment in terms of going into next week, because we don't really have a clear read on what's currently happening. But going on to the charts right here, starting from the start of this year, we can clearly see that we are currently we're down like 12%. So the DXY has not been performing as much as we like it to, right? Because we're seeing a bunch of weakness coming into the markets for the DXY. We're seeing this amidst trade negotiation uncertainties. But if you take a look at recent econ data, such as declining and reducing, and reduced unemployment claims, as well as last month we had the strong NFP reports. This is signaling that we could potentially be seeing a reversal higher for the dollar, right? So for me to be bullish on the dollar as of now, I want us to kind of break out of this area right here of resistance. I want us to come up, fill in this area, and then hopefully do a pullback and then a retest to then continue higher. Okay, but this is likely not going to happen that quick, because next week we currently have everyone's favorite NFP data coming up next Friday. We also do have the Fed funds rate coming in on a Thursday for me, which is in local Malaysian time. So this is what we are likely to be seeing, a potential rangy market just before Thursday and Friday. Of course, if you're trading intraday or trading scalping, this doesn't really matter to you, but what I'm just expecting is that we want to see, and we are going to see, momentum coming in really quick. My cat's like losing her mind, but we're going to see a large momentum coming into the market slightly on a Thursday and Friday. Okay, so which is why I say it won't be happening too quick early on in the week. Give me a second, let me just remove my cat from the room. Okay, coming back onto the charts. So essentially, if we can get this break, I want to see it happen next week and hold above this area if we do see a break out of it. But currently we're just stuck between a range between these two areas of support and resistance, so there's really not much to be said at the moment. Okay, taking a look at the momentum indicator, we are also still pretty bearish. So if we could get a break above it, then we see a bullish momentum shift, as well as breaking out of some of these structures. That would be great for a bullish dollar outlook. But I also want to take your attention to the pound right here, because the pound is actually, considering we could see a bullish dollar, right, based on econ data, based on potential reversal points, we could see a potential short against the dollar for cable right here, right, because we're seeing bearish readings from weaker than expected UK econ data. So what I'm expecting the pound to do is, I would want to look for short-term longs around this area of support, and then take it up into this area of resistance, where I can then short off from it. Okay, so this is going to be a very short-term, like intra-week swing, right? It's going to be an intra-week swing if it does set up, and I do see my low time frame confirmations, right? We did kind of cross back below the 20 EMA, so I would be curious to see if this could be a potential breakout signal or fake out signal for some of the retailers right here to take it long. Okay, the next one is also take a look at UJ right here. We are prime for a potential short if we do come up into this area of resistance, right? Take it short into recent structure right here, or maybe perhaps even some of these lows quite equal down below here. We could see price come down all the way here if the next econ data for next week, such as the funds rate or the NFP, comes in bearish for the dollar index, right? So this is going to be one of my bearish ideas, because it all depends on what we see next week. Currently institutional positioning and sentiment are pretty mixed, so there's no clear direction. So either one could play, right? You could long pound into shorting it, or you could also short the UJ if it comes into an area of interest for shorts. Okay, I'll just clear off this from the charts. So next up, we also have gold. So gold, let me just clear this off. Let's keep that in there. It's like previous all-time highs. So gold has been a big focal point this week, right? We're seeing institutional investors increasing their long positions compared to their shorts, according to the COT data. Right here, you go to commodities, right? Metals. Open that up. So they are increasingly long in terms of the COT data compared to their previous shorts. So when this happens, right, take a look at the daily chart. We did see an initial pop higher last week, coming into this area of all-time highs. Also, this bearish structure holding price from going higher, right? We're seeing it popping up, but then also seeing it see some selling pressure as we came into the area right here. So this is like the first, second, third, fourth time it tried to break out of this area of highs right here. So some people could see this and say, oh, you know, this is pretty bearish, right? We're failing to break out of this area. But I personally believe that, based on the order book matching theory, where this area right here is likely to have a bunch of sell orders, right? Because it's pushing price lower. But take a look at how we're trading as we're coming into the area of resistance, right? We're making higher highs internally as well as higher lows. So we're making like a bull flag, right? I don't trade patterns, but we're making like escalated highs and lows right here. So with this in mind, this is more bullish than bearish in terms of this large area of range, right? It's more bullish than bearish because it hasn't shown any signs of us taking out any of these lows to turn bearish, even though we've held this area for like 4 times now at this point, right? If you take a look at something like the weekly right here, we are seeing a strong upward trend. We are very far away from the 200 EMA as well as the 20 EMA is just nearby, but still quite some ways away from it. So the weekly chart is showing strong upward trend, right? Showing this strong like a ladder pretty much. Although you could say the momentum is slightly stretched. As we look at our momentum index right here, the market is kind of pausing and making lower lows and lower highs right here on the momentum index, right? But currently, if I had to pick a side, I will still be bullish on gold. There's nothing to signal to me that we are going to be seeing bearish gold until we break some of these structures, right? Come down into this area of support, we see a bounce higher, fail to break it, and then we ultimately tag down lower. That is when I'm looking for a potential short in the gold market. But currently, I am still long on gold, right? Although if we do see strong US data coming out next week, like I said, we could see gold have a slight pullback in form of a muted gains. So that could reduce the upside potential for gold. So keep an eye out on how price trades around these areas right here next week, as well as the econ data coming up. Because right now, as far as we are concerned, we are currently just ranging, right? Sure, I'm saying that this range is more bullish and bearish, yes, but that could change anytime, Okay, take a look at silver right here. Let's take a look at the technicals. It's also super strong bullish. Same thing with gold. Currently, we are basing into that 20 EMA right here, as well as this previous area of support, right? So keep in mind that we could see a potential short-term long opportunity that's following that trend to take out this recent extreme high right here, which is pretty extreme compared to past data, right? We haven't been in here since like 2012, so it's really extreme. All right, so yeah, with that in mind, I'll be looking to long silver with slightly lower risks just because of how extended we are. I would like to see us kind of like tap down beneath the 20 EMA, retest it, take a short down into this area of support, which is a bit more better in terms of pricing, right? And then I could potentially look to go on side long with that again once we come into that area of support. Okay, so taking a look at crude oil as well. Let's take a look at that. So take a look at crude oil, right? We're still pretty much ranging. At this point, we've been ranging since at the end of June, so almost a month now, pretty much a month. We've been pretty much ranging for a month now. So currently, we are not seeing any areas of support or resistance nearby within this range. Maybe if you go down to forward, you could see that. But really, if we're printing side by side and not making any strong structure, especially on a pair or an asset as momentum based as crude oil, I would rather just not do anything really. I would prefer to just wait until either we come into this area of support, see a bounce higher, I can then take a long up into the 20 EMA or 200 EMA with my final targets around these areas of resistance, right? That could also be a play, understanding that currently there is still no sentiment to really push crude oil in either direction yet, right? Sentiment has not been changed, pretty much mixed. So just waiting for either these extreme levels to be hit as of now for trade to be taken, right? But until we see a catalyst for obvious higher or lower prices, I'll be staying on the sidelines for crude oil, waiting for these areas to be hit. Okay, so that is pretty much it for the commodities. Let's take a look at the US indexes. So let's take a look at the S&P 500 first off the bat, right? So let me just clear off these drawings. So obviously, looking at the chart right now, we don't really have much to look at apart from all of these crazy areas of support printed out by the UFOs. Taking a look at the momentum index, we're also still super bullish, so not much to see there. We've pretty much been bullish for a long time now, which is mainly driven by a pro-growth econ environment, as well as potential easing trade concerns, right? But despite all of these strengthening indexes, right, they even despite whatever people are saying, they might appear to be a bit overstretched and overbought, right? Which is something you want to pay attention to if you are looking to be buying aggressively at the current levels, because we're literally trading at all-time highs right now, right? Sentiment is mixed, right? We did see a potential uptick in the put options, right, in the options market, which is where people buy put options or call options, stuff like that. So we did see an uptick in put options, which are basically showing that the sentiment right now might be shifting into a more bearish tone, particularly on things like the small cap Russell index or the Nasdaq, while the Dow might see some more of a bullish momentum right here, right? So the Dow has cleaner price action, I'd say, compared to the S&P 500. It has more structure, right? Some obvious legs right here, and we still have room to go before we make an all-time high. So that's something you could be looking to take advantage of with the Dow, because it has not caught up with the Nasdaq and the S&P just yet. So you could look for long straight off the bat next week when we open, because technically we have already done an impulse, a pullback, an impulse again from the new level, and we just tapped it on a Friday, so you could look for longs to align yourself into all-time highs right here, just barely shy of it. And whenever we break all-time highs, right, the market doesn't just reverse immediately. When we break all-time highs, we pretty much continue making higher highs and higher lows, and then we do a sharp retrace. That's typically what happens, right? So once we, oh, that's weird. Once we break all-time highs, we might base a bit and then see a pullback, right? We might base a bit and see a pullback. So that could be what we might see right here. This is okay. We might see that happen next week. Okay, we might see that happen next week. Either way, I would be long on the Dow right now. I don't think I'm short on any of the indexes. Yeah, I'm not short on any indexes right now, including the Nasdaq. Right, I'm not short on it. I'm pretty much long across all indexes. It's just that we are currently making all-time highs on both the Nasdaq and the S&P 500. I'm not looking for any swing positions, right? Short-term positions, day trades, sure. But the Dow is looking really nice to play catch up, pretty much. So the Dow, if I had to make a guess, would be something you want to be looking at for next week. Okay, so take a look at next up we have Bitcoin, right? So let's take a look at Bitcoin right here. So Bitcoin did reach a new all-time highs at 123. Currently we are basing right around that area. So this base is pretty much what I'm expecting to happen on the Dow right now. Big impulse, taking all-time highs, traded through all-time highs quite a fair distance. Like this is almost an extra 10%. So it starts to base. So you could expect some people to be taking profits right at this area, and then you could see potential pullbacks into areas of support. The next one is around this area on a daily for me. So if it does do a dip, I'll be eyeing this area for a long idea to hold until its final target at the previous all-time highs. But of course, currently the economy is very strong, which is why we're seeing this risk on inflows back into Bitcoin right here. So that's what I'm expecting for Bitcoin. If we can see a pullback, if we do, let's say we just kind of like break out. So we base here, we break out, then this area should be my next area of POIs for long setups. That's what I'll be expecting here on a Bitcoin. Okay, take a look at Ethereum right here. Right, for Ethereum, I'm expecting a pullback short because we have come into an extreme area of resistance around the 3.8k mark. For all of you crypto holders, I hope you have gotten in at the right price, and you might want to look at managing some of your positions, because it wouldn't be weird if we get a shift from this area in form of a pullback, maybe taking out these lows, but ideally coming back down into this area of support, where I'll be looking to add more positions into Ethereum for my own holdings. I don't personally currently trade or have any open positions on prop firms for crypto, but I will be looking to add more positions once we reach the 3k mark here on the Coinbase data feed, because that's my next area of support. When we do come down here, we could also base into the 20 EMA, which could see a short-term reaction. You could look for longs there, but ideally I would want to see price come into this area of support right here. RSI, the momentum index, is also still bullish, so nothing to signal a potential bearish setup just yet, but I wouldn't mind if price does reject from here, because I could get on site with more positions, right? I can now have a reason to add in my current holdings if we reach this price point, or if we break out of this area and then form a new price point which I can then long from. right? It's very simple. Okay, so that's pretty much it. I think I've covered a few pairs. Let's see what I covered. I covered the dollar, I covered GU, EU, UJ as well. I covered gold, silver. I covered indexes. I covered Bitcoin and Ethereum. Let's actually take a look at the Nikkei. NK245. The Nikkei is looking pretty clean as well. I think we could be coming into a potential area of resistance on the 4-hour. Oh, nothing just yet. Taking a look at the daily, we have seen crazy momentum coming in with these two candlesticks, right? So if we do come down lower on the Nikkei, I will want to look for potential longs up into this area because the Japanese economy is doing very, very well right now. I'm personally expecting a pullback to happen though, so yeah, that's pretty much something I'll be looking at if you are trading the Nikkei, right? Nikkei has been performing not too shabby since the start of the year, not too shabby, because if you take a look at this is the start of the year, right? We came lower because of Trump, and now we have recovered, and we are currently above the break-even point for the year for the Nikkei, at least at the moment, right? So expecting a slight pullback for a potential move higher from here for the Nikkei. Okay, we have also turned bullish on the index, on the momentum index around this price point right here. So the momentum should carry onwards from here. We are trading above the 20 XAUUSD at 200 EMA right here. Okay, alright, so yeah, I threw in an extra Nikkei for you if all of you trade the Nikkei. If not, then it would probably be just something to, you know, keep an eye on, if anything, right? It could be a new arsenal added to your, you know, whole weaponry, right? So don't sleep on Nikkei. Alright, when it moves, it really moves, right? Because Japan is a very interesting country. Alright, so that's all for this week, right? I hope you had a great time. I hope you gained something from this video. I don't ask for likes or subscribes, but if it does help you, I'd be happy to accept that, right? Alright, take care. I'll be putting out more content soon, and hopefully you all can enjoy that. Alright, peace.